Ever wonder what's really going on when you click buy on a bond? Spoiler alert, it's not elves in green sunglasses crunching numbers. It's a complex dance of traders, technology, regulations, and enough acronyms to make alphabet soup jealous. Today, we're pulling back the curtain on the U.S. bond market to show you a hidden world that makes your investments possible. Welcome to our backstage tour of the U.S. bond market. We're talking about a massive, intricate system that trades trillions of dollars every single day. Let's break it down into three main markets: treasuries, municipals, and corporates. First up, the Treasury market. This is the big leagues, folks. When you buy a treasury bond, you're tapping into a market that's considered to be the most liquid and efficient in the world. Here's how it works. At the heart of the treasury market are primary dealers, big banks and broker-dealers authorized to trade directly with the Federal Reserve. These guys are like the VIPs of the bond world. Now don't let your cynical side get the best of you. This isn't some kind of government handout to some Wall Street fat cat bankers. The Federal Reserve allows these banks to participate because they have the capital that it takes. The key word here is participate. That means they can buy bonds, but there's no guarantee they'll make money. They could make money or they could lose money. A lot of money. When the government needs to issue new bonds, they hold auctions. Primary dealers are required to participate in these auctions, ensuring there's always a buyer for government debt. They then turn around and sell these bonds to other banks, hedge funds, pension funds, and individual investors like you and me. Yes, they make money doing this, but if the market moves against them, that's when they can lose money. But here's where it gets interesting. Most treasury trading doesn't happen on a centralized exchange like the New York Stock Exchange. Instead, it occurs in what's called an over-the-counter or OTC market. Imagine a giant virtual trading floor where dealers are constantly buying and selling with each other and their clients. The bulk of these trades are done over electronic trading systems like Bloomberg, with dealers sitting in locations across the world: in New York, St. Louis, LA, Chicago, Tokyo, Sydney, London, all over. At one point in my career, I was a treasury trader. When I traded treasuries, I thought of it as being like an air traffic controller. But instead of planes, I was juggling millions to hundreds of millions of dollars in bonds. All day long, I would have buy and sell orders flying at me from the sales force inside my firm. I immediately had to assess what I was going to do with that order. Was I going to fill it against what I currently owned? Could I buy it cheaper away? If I didn't own it, was I comfortable being short for a bit? Or did I want to wait because the market seemed to be tailing off and I thought I could get the customer an even better price by showing someone in the street a down bid? That's 5 seconds in the life of a treasury trader, and that happens all day long. It can be like playing chess, poker, and Tetris while riding a unicycle on a tightrope over a pool of hungry sharks, which, if you can't tell by the smile on my face, is a whole lot of fun. Now, let's move on to the municipal bond market. This is the market in which I spent the bulk of my career. This market is a bit different because it's more fragmented. There are thousands of state and local government issuers, each with their own bonds. Unlike the treasury market, the muni market relies heavily on broker-dealers to match buyers and sellers. When you want to buy a muni bond, your order often goes through several intermediaries before finding a match. It's like a game of telephone, but with billions of dollars at stake. When I first started in the business back in the early 90s, everything was done by hand, and every trade with the street was done over the telephone. Fast forward to today, and I rarely use the phone anymore. If I need to talk to someone, I do it over instant message chat systems. And instead of handwriting every ticket, today I can do it in a few clicks. A lot of times it's done automatically. So once a broker enters the order, it flows to our system and executes immediately if we own the bonds in our inventory. In some cases, we don't own the bond. Our system routes it through a middleman to another dealer and buys it from them. That entire process, a lot of the time, doesn't require anyone to touch it. It's executed automatically each step of the way in just a few seconds. The order goes from one firm to that middleman to the other firm, and bam, bam, bam. In a matter of seconds, they're all executed. It allows us traders to work smarter, not harder. Here's a surprising tidbit that many individual investors don't know about. It's a tool that I used on a daily basis as a trader, and I always use as an investor. It's actually a free public website where you can find detailed information about municipal bond trades. It's called EMMA, which stands for Electronic Municipal Market Access, and it's run by the Municipal Securities Rulemaking Board, or MSRB. EMMA is sort of like the secret weapon of muni bond investors. It provides real-time trade data, disclosure documents, and official statements for nearly all municipal bonds. Imagine having a window into the trading floor at a major investment firm that shows you exactly where bonds are trading. That's EMMA. What's really cool is that EMMA levels the playing field. When EMMA came out, it made muni bonds more accessible because it gives small investors like you and me a lot of the same information that we used on the trading desk to make buy and sell decisions. Whether you're a small individual investor or a big institutional player, you have access to the same information. Kind of like having a backstage pass to the muni bond market right at your fingertips. I always check EMMA before I buy a municipal bond, just to see where the bond has traded recently, to make sure I'm not paying too much over how it's been trading the last few days. There's a lot in this platform. Let me know in the comments below if you'd like us to do a detailed breakdown of the EMMA platform. I really do love it, and I hope you will too. Just Google EMMA Muni Bond, and it should come right up. We'll put a link in the description below. If you're enjoying this peek behind the financial curtain, don't forget to like and subscribe. We've got plenty more market secrets to share. Now let's talk about the corporate bond market. This is where things get really interesting. Unlike stocks, most corporate bonds don't trade on a centralized exchange. Instead, they trade in a dealer market, not all that different than munis. Here's how it works. Dealers, typically large banks, hold an inventory of bonds. When you want to buy a bond, you're actually buying from the dealer's inventory. And when you sell, the dealer is buying it from you. It's like a giant game of Go Fish, but with billions of dollars at stake. Dealers do the same thing in the municipal market as well. They make money on the spread between the buy and the sell prices. In other words, you buy the piece of cake and they get to keep the crumbs. But here's the kicker. Because there's no centralized exchange, prices can vary from dealer to dealer. That's why it's crucial for investors to shop around and compare prices. Maybe look at different platforms like Schwab and Fidelity and compare the prices. Now I know what some of you might be thinking. Isn't this system inefficient? Wouldn't a centralized exchange be better? It's a fair question, but the bond market structure actually has some advantages. It allows for more flexibility in creating customized bonds and can sometimes result in better prices. Here's a question for you. Have you ever bought an individual bond? If so, did you know about all these behind-the-scenes players? Share your experience in the comments. I'd love to hear about it. Here's a pro tip from my 30 years of experience trading fixed income securities. Always check multiple sources for bond prices. For example, I always check both Fidelity and Schwab. They both have really great platforms for buying bonds, but sometimes one may have a better price than the other. Remember, the first quote you see isn't always the best one out there. It's like shopping for a car. You wouldn't buy from the first dealership you visit, now would you? Want to learn more about the intricacies of bond trading? Feel free to ask me a question below, and I'm happy to spill the beans. So what can you do with this insider knowledge? Here are 3 steps. 1. Next time you're buying or selling bonds, try getting quotes from multiple brokers to ensure you're getting the best price. 2. Pay attention to the bid-ask spread. It can tell you a lot about the bond's liquidity and what traders really think about it, especially from the bid side. In other words, what they would pay for the bond if they had to own it. 3. Monitor the U.S. Treasury bond market. I'll put a link in the description below that'll give you a snapshot, live updates of where the interest rate market is moving with treasuries. But I'll ask you this, if you have a better one, share it in the comments. I would love to see it. This is the best one I've found and the one that I come to rely on, but I would love to find a better one. It's good, but it's not great. But here's one last additional peek behind the curtain. Just because treasuries are down or up doesn't necessarily mean all bonds, munis, corporates, agencies, etc. are down too. They're very different and independent markets that don't always move in lockstep. As always, consult with a qualified financial professional before making investment decisions. Your financial situation is unique, and what works for one investor might not work for another. See the description for the full disclaimer. Until next time, this is Michael O'Donnell saying, always think of bonds if you're looking for an investment where you know exactly what you're going to get and when you're going to get it. This market, oh, darn it. Okay, so we gotta go back. Darn it, I gotta put my phone on airplane mode. Holy smokes. People always gotta call while I'm making videos.